Okay, we are live. The Prospero.Ai stock market live streams. It is March 20th. We have a fun day in the stock market. We have a Fed meeting currently going on. Seems like the market is reacting pretty positively to it. Some quick things that I saw from it is that they left rates the same and that it's still expected that they will cut rates 3 times in the rest of 2024, which the market was kind of had a nervous thing going into it today where they might lower that expectation to 2, but they kept it the same. Um, and I saw you making some moves, George, maybe based off some of the stuff we're seeing going on with the meeting that's happening. Seems
I
like
was thinking about more moves. Yeah.
yeah, like a bullish thing for the markets.
Yeah, we always like moving our portfolio more bullish, which is what we are in the what we've been doing this afternoon.
Yeah.
People
So
just, people just like to hear news about things going up better.
yeah, it's true. And as we get some viewers rolling in here, let me remind everyone, please like the video and comment uh, anything you wanted to know about what's going on in the market today. Welcome, Wolf. Good to see you. Hello, Sentinel Studio. Good to see you. Wolf, I rewatched Misstreams and now I'm back. Good to see you. Back and better than ever. Some of the stories we're going to be getting into today is Chipotle's stock split. We're going to be talking about Intel and how they were just awarded a lot of money with the CHIPS Act, and maybe a possible AI index in the future. We got some, even though the market's so bullish today, we got some bad data from Kering, which is a company that owns Gucci, and their sales dropped a decent amount. So we'll talk about that. And then possibly maybe we'll take a look and a deep dive into Take Two stock as they're supposed to be releasing a new GTA next year. Maybe we'll highlight them before they come into the frontier news. Did you miss me from Wolf? Of course, Wolf. We love seeing your comments in here. Um, and
Yeah,
we'll end this.
definitely. Oh, hello. I mean, and hello to Sentinel Studio. I don't know if you're a returning viewer, but we always like participants. Yeah, Wolf, we always miss you when you're not here. You're our best cheerleader. And I mean that in the nicest, most masculine way I could possibly say it.
He's our leader in the chat. I'll put it that way if you like that better, Wolf. um, but yeah, then lastly, we'll switch over to the model portfolio update, and that'll be the stream for today. Um, but George, do you want to give the people, your thoughts of what we're seeing in the market based off the Fed meeting that is occurring?
Yes. I mean, pretty bullish. I think that you know, it's one of those things that you've gotta it's the same kind of thing that we say with Powell as we would say just like with the Prospero signals. You got to get to know any data set, and Powell is his own data set as a person, like to understand how to interpret the data. And Powell just was pretty bullish for Powell. And he was bullish not in what he said in the affirmative. I would say he was less negative than he normally, is. He was sharing that they might have been a little concerned about the January CPI reading, but he said that might be seasonal, right? That's just like a perfect example of he didn't have to say that he thought it was seasonal, right? He could have just said, we're concerned about that reading, right? That would be kind of a firmer Powell. And you have to look for little things. I love to dissect little language things like this because it's so important, whether it's a conference call or Powell or whatever. But that's what really zeroed me in on dovish Powell. Whereas I've seen him swat question, I've seen him put things like that, swat questions away, all that stuff where he's just he doesn't want to be positive. He doesn't want the market to react positive, and he knows exactly how to deliver that message. But this one, I would say he didn't really mind. He definitely wasn't trying to swat away optimism. I think that, what the reason for that is with the market doing so well, and we've talked about kind of being range bound in the past. I do think there might be some pressure from, upstairs, so to speak, for him to probably be more dovish the rest of the year. But yeah, I would say that's what the market is reacting to. As well as them, saying that they think there's 3 cuts in this year instead of 2, which Stephen actually pointed out to me. But yeah, I would say that today when Powell spoke, he's not a very upbeat guy, but in terms of the nuance, I'd say that's as upbeat as I've seen him. And in just looking at what that means for QQQ and SPY net option sentiment, QQQ is about where it entered the day at 42, opened at 43. That's well in our bull zone. But SPY at 49, also in our bull zone. Looking silly, not looking like particularly, not looking like, oh, whoa, like, wow, bullish, but like the way the market's reacting, but those look good.
So how it had been seeming to me in our live streams in the past couple of weeks is that non-tech stocks were starting to look more attractive and kind of investments outside of the tech space. Does this event today change any of that thought process? Does tech and AI come back into the forefront? Does growth stocks or smaller stocks look better after today, or does it not change that much?
Hold on, I'm just typing. I just noticed something that I need to quickly take care of, but I will be right back with that question. What do you think the answer? Why don't you start answering that for yourself? What do you think I'm going to say?
Sure. I think the answer that you're going to say is that I think it does make tech look better. I think the market is kind of just in a waiting period for a second there because they were waiting for Powell, and tech had already hit an all-time high very quickly this year. But I would say it does give the market, does take away the fear and allow it to go higher from here. That would be
Yeah,
my
I
answer.
mean, what I would say is like, I think there's some exuberance around tech that, it's nice to have an AI specifically, obviously. And the nice thing about exuberance is like, it's a nice thing to lean on, like where you're just like, and I have been, right? I've been pretty heavy tech myself. What I'll do the worst of as I was getting a little concerned is I'll actually hedge a lot in the other direction. But I was hedging because I wanted to own Nvidia because I've been wanting to own Eli Lilly, Meta, Google, names that I expect. We're taking a break from SMCI because I think it's in a little bit of a buy in the rumor, sell in the news kind of thing. And we'll get back into it before too long, but I think it might get hammered for a little bit longer first. And we've been timing that, great all year. I would say perfect if we just got out what we did and stayed out. But we're going with great because we did take like, a 20% hit, but on one of on I believe our 5th position this year, but I believe we have 3 that are above 50% gain. So we're happy with how we handled that. But we want to own that exuberance. But when you see that exuberance, there's also risk of strong corrections, right? So we're being mindful of both of those things. It can turn very quickly. And like for many of you, like I think the part to latch on is like, I do think there's exuberance and there'll be continued exuberance. So you might not want to play the ups and flows up and down the way that I do. And that's an important thing about our products that if you didn't read our newsletter this week, it's a must read, Stephen, if you want to post it. Just because we really go into exactly how Prospero works, how to use it, a really good case study and someone who helps me write the letter who started out just as a Prospero user or a stranger to me, other than someone emailing me that read the letter. So yeah, I think that is I think that's the important thing. Like, yes, we've been diversifying as we've been worried about perhaps a correction in tech. So we take kind of a more defensive, position where we add shorts and we diversify more into things like energy that we think we caught on the upswing. However, we're looking tech. Like all of like for the foreseeable future, we want to be long tech, and avoiding the downswings, as well as measured diversification if we see bear concerns mounting.
So I see a stock mentioned in our chat. Maybe we could look at that for Joseph quickly. He's asking about NU.
Do you mean
How do we?
MU? I mean, it could be NU, but I know people are talking about Micron because I think they're going to report soon. Nubank. That makes. I mean, I like Nubank as a business. But let me see how it's doing in Prospero. Yeah, especially for a finance stock, Nubank looks great. Very high net social. Yeah, I mean, for a finance stock that looks like a great investment. I mean, as I said, for a finance stock, I don't love finance stocks, like just generally, like, and I'll tell you why. Like at a certain point, you're owning a finance stock, you're owning it for its dividends, right? At that point, I would just go all the way to owning Schwab dividend, SCHD. Like, I think I consider financial stocks kind of like half measures. So I definitely think that that for a diversified portfolio, especially if you own closer to like, above 25 stocks and you want to diversify, that's a great stock to own. Me personally, and by the way, I'm not like saying anything bad about diversification. Typically when I invest and like I strategize as I do in the investing newsletter. I don't want a portfolio like I kind of max out at 20 stocks. I start to trim down. I went a little over this week and then I trim down. But I'm like max 20 so I can have high conviction picks and I don't necessarily have that broad of diversification where I'd own something like Nubank, but yeah, like it's a global diversification. I like that play. I like growth market banking plays more than I like US market banking plays. So I think that's why for a finance stock, I really like it. But again, it's a finance stock that I don't love as a category.
Well, let's go from Nubank to Chipotle because they had a major announcement of a 50-1 stock split. So they're trading around 3,000. So at this split, they'll be around $60. It is the largest split I can ever remember seeing. Companies do 2-for-1, 4-for-1, 5-for-1, 10-for-1, 50-1. Is there anything we should read into that more than usual, George, since it's so large?
I mean, it's kind of funny that I think the funniest part about that is it's just like, well, what have they been doing? Have they just been sitting on their hands? Like, did someone like call up the CEO of Chipotle and be like, hey, like, have you guys ever like thought about a split? And he's like, oh shit, yeah, we're like 2 years late on that. Like, it's very odd because that's why you don't see it. Normally, like, if a company is like interested in splits, they'll, to your point, Stephen, like maybe a 10-for-1, maybe a 5-for-1, 2-for-1, obviously, I think is like kind of the most commonplace. But like, if you do a 50-for-1 split, you're basically admitting that you've been delinquent on the splitting strategy in general. So I think that's pretty funny. And like, honestly, of course they should do that. Like, I'm wondering why it's not 100-1 split. Like, why stop at 50? Like, because at $60 a share, like, they're going to get more retail interest. I think at $10, like, or even like 1,000-1, like, you start getting lower and people don't like your company. So maybe like a nice half measure, something around $10, I think would be a great like price for Chipotle stock. And, I would say a mistake I see retail make often is I see people being like, give me a stock under $5 that I could basically like lever up and buy options, which is just like, oh God, no, don't do that. Like, because when you're looking for a stock under $5, or even worse, when people say under $1, you're basically looking at a penny stock. That you're basically saying like, ooh, I want risk. Like I've got a big appetite for risk and I want to take it, which is pretty much the worst framework you can have at an investor. I am just constantly trying to minimize risk. I minimize risk first, and then I look for upside. And that is the correct order. You say, what are the risks? How do I minimize them? And then, so like, you're basically doing the exact opposite, worst thing you can possibly do if you're looking for, stocks that are cheaper. Now, like, there was a time when, before fractional shares, where I would say, like, okay, maybe realistically you can't afford, like, to buy like ASML or Chipotle or these stocks that are trading $1,000 a share. Point taken. You don't need, like, you don't need to oversell me on that. I totally understand. There's parts about the stock market that are annoyingly unapproachable. But now, since most like brokers will allow you to buy fractional shares, just do that. Don't lever up penny stocks. Don't lever up stocks under $5. But, to go back to the start, like, there's realistic parts about the market, which is, yes, people invest based on price. And it was not very smart at all for Chipotle to wait this long to split, because they are a consumer product. They are a brand people know. They've been losing juice from their stock. People would be buying options in Chipotle, but, the flip side is maybe they don't want that. But that's what I always wonder. It's like, what? Nothing really changed here, Chipotle. Like, what has changed your logic? I would be interested to know that.
I do have to just say, I don't say this very often, but Chipotle is a company, I will support their product. It is so good, for people out there. We have a question about Coin from Jonathan in our chat, asking about what made you start to like it, even though its profitability was low. Seems like a good pick so far.
That is a great question. And I'm actually doing, for the first time, I wanted to get it out earlier. I'm doing like a little day in the life newsletter because I made a bunch of moves yesterday and I'm kind of narrating the moves. And I'll actually take it right up until Powell. Oh God, I forgot something I wanted to check. Sorry, guys. I want to get out of this stock SFL, I think. Or maybe not. Yeah, it's going back down. All right. So I did something very interesting yesterday that I don't really do, but we're gonna be, sometimes I like to be George the Robot Superhuman, because I am making a lot of calculations far beyond what a lot of people do. But sometimes I like to be George the Human. And George the Human woke up yesterday and he saw the market moving in a direction that he didn't expect. So what did he do? He started to make a lot of moves where he was basically like, as I said, I didn't want to sell Nvidia. I didn't want to sell any of my like long positions. So what do you do when you don't really want to miss the upside of your longs, but you're worried about the market going down? You add shorts. So I added a bunch of shorts, right? And I added shorts that I liked. And then I had the same problem on the other end. I said, okay, I think I went a little too far. I had one too many shorts. And then I basically posed this question to myself. I was like, well, actually, I'm starting to get concerned that the way the market's ending today, that they're going to like what Powell says. And even though Bitcoin was kind of trending down, I was like, I think it's going to start turning around because they're going to like what Powell says. But other than that prediction that I was right about, by the way, I asked myself a question. I was like, okay, George, Powell shares good news. What stock that I want to own would do the best? And, it was kind of Marathon and Coinbase were the two ones that popped into my head. And I've just really been digging the trending on Coinbase. It's starting to get very high in upside breakout. That means a lot of institutions are starting to buy like demand for calls going up in the long-term options markets, and all these ETFs adding Bitcoin seems like friendlier European legislation on it. Like, not a bad long-term bet, I don't think. But as I don't like to speculate on Bitcoin, or really the single stock risk of any cryptocurrency, what does it make sense to do? Buy the only platform that didn't have criminals run it after like kind of the crypto criminal winter, as well as just like a strong, tech heavy business model, good Silicon Valley connections, blah, 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 all that stuff. That's how I like to play my thesis that I think Bitcoin's coming up, buying something like Coinbase, not the other way around. But Also, I'm practicing what I preach a lot, right? I say, okay, Bitcoin's coming up. Ooh, and then also supporting that thesis, Coinbase is really coming on strong. That seems to be a unified thesis. Now seems to be the time to buy Coinbase, and I might own that for a while. Certainly, if that upside breakout stays pretty high, I might own that for a while. But yeah, that's the story. That work for you, Jonathan?
That is an interesting point you make about how Coinbase is kind of the last man standing now in the crypto, business world, as all of these other players went out of business. Um, that's
Yeah.
interesting that you brought that up. Yeah, it's kind of
Yeah, and
really
and and
beneficial
I'm
for them.
actually pretty confident that there aren't criminals there because they found a lot of other criminals. So,
Yeah.
so I was like, hey, like, it's like you look around Wall Street and what's the best delicate way to put this? I'm pretty sure there's criminals on Wall Street that haven't been prosecuted. Like, just because there's stuff, there's a lot of stuff that seems like perhaps it violates securities laws that I am you know, on the fringe privy to, that I would think there would be if these things were being followed to a T, more prosecutions around.
Hmm.
Um, but you even look at things like YouTubers and what happened with around AMC and things like that. There's people violating securities laws there. Like there was a lot of securities laws violations that I kind of witnessed in terms of the way people pitch the stock. And just so you know, the way that it's very important for me, the way that I do not violate laws, just like hard do not do it, is that I don't trade these stocks that I talk about. Very easy way to just be like, look, I'm not making money one way or the other on these stocks. And then the other way is I always try to share risks and benefits as I see them. And where you end up tripping securities problems are like when you're only sharing a bull case and when you're only sharing that bull case and also making money off that. Um, do you eye any miners? As we get deeper into that, Wolf, I just say own Block. I really love Block, diversified blockchain. Like I would say Coinbase or Block for me. I've toyed with Mara, but the problem with that is it's just once you Mara is just not really a business other than mining. So it's you might as well just own Bitcoin at that point if you're owning Mara. At least Coinbase has more of a business. That's why I like it. So yeah, I think Block is once you start getting into miners and the difference between miners and who you bet on, I just go all the way to Block at that point.
I do want to say for the people watching, you don't mean block as in square. You mean block as the
BLOK is the ticker. Yeah, that's
yeah.
yes, good correction.
Yeah.
BLOK is a ticker. It's diversified blockchain, and I like diversified blockchain over uh, cryptocurrency or any individual cryptocurrency because I think there's significant risk in individual cryptocurrencies, but I there's no argument for me that blockchain is going to be a promising technology. So, and then you also get in BLOK, you get things like Square, SQ, so that block. You get PayPal, you get Mercado Libre, which is those are just different companies. Mercado Libre is the Latin American Amazon. So companies with blockchain exposure, forward-thinking companies. And then you also get things like Galaxy Digital, which is a crypto hedge fund, right? So that being embedded in there, that's a great way to I'd say instead of going long Bitcoin, I'd much rather own Galaxy Digital because they have exposure to that, but they have active managers. And as we've talked about, there's very low transparency in the derivatives markets in cryptocurrencies. So you're way better off outsourcing monitoring the derivative markets to a place like Galaxy than trying to do it yourself, which you are wholly unequipped to do.
I also just saw a story, and this stock is probably in block too, MSTR, where they just crossed 1%, and so they own 1% of total all Bitcoin that will ever be. I think it's 214,000 they own now, which is just crazy. They're like uh they're like a volatility index for Bitcoin almost at this point, MSTR stock.
Yeah, it's pretty interesting where it's just like when you look through those miners, um, when you look through those miners in, I think it might finally be time to get out of SFL. Oh, damn. See, I'm being lazy. There was a news story about SFL. They got these new tankers. We got to get the hell out of here. Sorry. I know Steven always makes fun of me when I do these live exits,
No,
but it's for the good of the
S
people, Steven.
for the people, SFL, what are they? They
We were
operate
short it.
vessels
We're
and
getting the hell
offshore
out.
related assets.
It's an industrials hedge play um, that I wanted on the other end instead of like, because I thought GE might be reaching its cap. Um, but
Guess maybe the market's in too much of a bullish move for even
oh yeah,
bearish
we're
looking
gonna we're
stocks.
gonna be taking a chainsaw to our shorts in the not too distant future.
You think you'll
Well, maybe not a
cut
chainsaw, like maybe more of an axe.
cut more shorts or add more longs? Which do you think you'll do today at the end?
We're gonna cut shorts. Like we might add longs, but like actually the one um I think the one thing on that front is that Prospero doesn't necessarily cycle through the longs as much as the shorts. Its favorite longs tend to be a lot more stable. So that's why I'm much more inclined um, to cut the shorts, right? Anytime I want to add shorts, it's pretty much like a limitless supply of interesting shorts to Prospero. The question is like, how deep into the bucket am I going? Um, but then longs, like, there's only like at any given time. That's why on longs, I much more frequently double, triple, quadruple up, which is something I might be more inclined to do because the fact of the matter is, like, Meta, Nvidia, like the stocks that I'm adding right now, those are just more interesting to me than any of the other longs by orders of magnitude.
Well, let's see if you're interested in this next stock then, because they were just awarded $8.5 billion from the CHIPS Act. The stock is Intel. They also, because of this act, have access to up to $11 billion in loans. And it's amazing how ahead of the game Intel was, and now behind the curve they find themselves, and that they got this big bill in their favor. What do you think it means for Intel? You think they're going to be able to like regain some of that momentum they have lost?
Well, the founder of Intel is one of my like I actually try to one of the people I model my leadership style after. A combination of like, Jobs's creativity and Bob Noyce's, I would say, like egalitarianism. Like there's a longer Bob Noyce story that I've told other days. Maybe if there's demand for it, I'll tell it. I'll tell the longer version again another time. But yeah, Bob Noyce basically started Intel and other companies. He was basically pushed to be a CEO by some of his scientist comrades because they thought he would be a good leader. But his style was always more egalitarian, leveling the playing field, as Prospero aims to do, if you will. And when he started Intel, he basically was building semiconductors for Bell Labs. They weren't giving his team enough of the cut. And he just branched out from Bell Labs, started another new company, started Intel, except, for him, he didn't really like the structure of a lot of businesses. So he made a very flat organizational structure. He worked in a cubicle and anyone could come up to talk to him about anything that they wanted. And so, Intel has a rich history that I like a lot. But yeah, talk about like, I mean, the story's as old as time. Like, I think it's really funny, like what happened to Sony too, and like they had they had, like portable music down pat, and then they started making those ridiculous mini discs even after like Apple was already making the iPod. They were like doubling down on that, and it's just like, oh god, what are these idiots doing? which is, very similarly, like Intel had so much time to like try to do more of what Nvidia was doing. And I don't know if they tried and failed. I mean, to be fair, like what Nvidia is doing is like absolutely incredible, especially the way they've like invented their own highly unique way to organize low-level code and build hardware around that. I mean, it's brilliant the way their company is organized and their moat, if you will. But like I would say to that also, like there's a book that everybody should read because it would help anyone in their job called Lean Startup. And we like to run on lean principles here. And lean principles is basically like a different way of saying what I say all the time, which is talking about the scientific method. And the scientific method applied to that is just basically like, don't try to answer complicated questions or any questions too fast. You should figure out and test around them, right? So Lean Startup just basically says like create spaces that are good for innovation, and spaces for innovation tend to be smaller. They tend to be like less like corporate in terms of like, how long is this going to make money? It better make money in 2 days or I'm shutting the whole thing down. Like that's what I mean by like more corporate. But oh God, the CNBC. I just installed the app. It's like, but let's see what they have to say. Dow rallies 400 points to record after Fed reiterates rate cut guidance. All right, it's good news. But we already kind of covered that. But yes, I think that there's absolutely a way that Intel could have innovated. And a lot of companies ignore innovation. And a lot of companies kind of die because they've ignored innovation. Like Walmart is another really example because like what we're talking about with Walmart as it relates to Amazon. And like, I don't like, I knew there were like a lot of Elon Musk stands, but like, I'm surprised there's all these like Walmart stands on the internet. Like, I didn't know that was a brand that you was really like so close to your heart. Which, like, by the way, good for you, Walmart, because like all you're doing, I mean, I guess you're just giving people low prices, but like being in a Walmart is like the most depressing thing. Like, I think there's hospitals with better vibes than Walmarts that I've been to. Like, so I think it's pretty funny that some people have like a positive brand association with Walmart. But obviously that's like the easiest example of like how simple like innovation can be. Like they were clearly like Amazon was clearly innovating and like Walmart couldn't even like that's not even the same thing as Nvidia where it's just like, yeah, I can understand that not everybody would, even because especially even now people know exactly what Nvidia is doing and they still can't duplicate it. I can understand at times when they were a smaller business, why people wouldn't necessarily try to copy them. But the Walmart like shipping thing was like staring them right in the face, and they had much better infrastructure for a long time than Amazon, and we rip on them all the time. So sorry, Walmart stands, if this ends up as a short. But yeah, I think that that is a really important kind of point on innovation. And honestly, one of the things I look for, like one of the things, like I don't know, you guys might have heard me say about Eli Lilly, is like I say they're strong on innovation all the time, and that's a really good point. Like they might not have been the first to the what is that the weight loss drug? What is it called, Steven?
Ozempic,
Ozempic,
Wegovy.
right? But they have their own not too long after that happened. That's an example of a company that takes innovation seriously, right? They probably started developing that not even in parallel, probably when that thing was in trials, if it's live now. They probably started developing their own competitor. And that's a really good example of a good innovation policy, right? Where it's like innovation isn't just like, I need to think of a new idea. Sometimes it's recognizing when new ideas are out there. And like, the one thing you can't say is like, maybe improve on, like, who knows? Like, I don't think anyone's even a good enough scientist to understand the difference between Ozempic and whatever their drug is. I don't really know. But like, one of the first things I look for after strong fundamentals like good Prospero signals, especially if I'm like thinking about a stock that I might want to hold for a long time or recommend on this, is I look for, strong innovation. And every last one of my longs, if anyone wants to ask where I think they're strong on innovation, I don't really own a long in the newsletter portfolio unless I think there's a strong innovation team, unless it's something like, Eagle materials, like raw materials. I don't need to see innovation there. I just need to see like functional minds. Like, but on anything else that aren't just like kind of pure resource plays, I'm really looking for innovation. But that's not to say there are innovations that could be made in mining that could do that. But like once you get into the nuances of that, part of it is like I don't really even feel particularly qualified to figure out like how mining innovations might impact a company. I feel way more comfortable looking at R&D in other businesses. And like that's another lesson I teach all the time, which is basically like know your strengths and weaknesses, right? I know that I'm strong in tech. I know that I'm strong in consumer discretionary, looking at innovation there. I know I'm pretty strong in looking at healthcare innovation. Like, but when I get into like industrials and materials, I don't know that as much, so I don't necessarily even take like innovation. Like one of the things I'll tell you, one of the things I own GE and industrials. I know they have a good innovation policy because they're like leaders in even like what you might call like white papers around like innovation and management and things like that. So I think that that's kind of like a 30,000-foot view on innovation there because like to be honest, if like then like Six Sigma management, I don't think I could very specifically tell you exactly what they do, just that they have a good reputation for that. But that is to say that like yes, when I see GE come up on my like radar strong in the signals, like I can immediately jump on it because I'm like, oh no, I know they have a good innovation reputation.
So speaking of innovation and staying in AI, I think about how all of these, growing and developing companies could come public over the next decade that are within AI. Do you think there will be an AI index similarly to how the QQQ is like considered the tech index, or will the QQQ just, like kind of mutate into, tech and AI? Are tech and AI the same? How do you feel about that?
I think the last thing you said is very interesting. I think increasingly tech and AI will be synonymous. But I do absolutely think there'll be an AI index and like people are probably already working on at least thinking about that problem. Um but I would say that that's one of the things that Prospero is actually working on. Like one of the things longer term, we want to help people with their investments. And one of the ways that we could do that is like we're going to have semantic search. So you'll be able to look at like AI companies with high upside, and that'll just like pull in. Um, so I do think that that's something we're thinking about. That's something other people are going to think about. It's going to be a bigger part of our lives because like one of the things we're going to do when we say that is like bottom up sector building. Like by doing that, we're going to look at like price co-movements and how stocks are talked about instead of the stupid way it's done now, which is just like top down, like enforcing rules on things. But yeah, I think that like AI is, is becoming a bigger and bigger part of our world. For those that didn't watch the NVIDIA presentation, it was super cool. There was like something that I called they had this like AI generated movie at one point that was kind of like robot Fantasia. That even if you just watch that movie, I think that's pretty cool. It was like pretty short. But man, Jensen Huang knows how to put on a show. Like I hadn't watched like extended Jensen Huang stuff, but like yeah, it's as good as any TV show I throw on in the background.
Yeah, it's absolutely insane what's going on with all the stuff. OpenAI Sora creating videos. It's all incredible, really. Um, it's just about time to switch over, but maybe we'll just hit on this last topic quickly before we go into the model portfolio update. I always like to balance ourselves out. We were pretty bullish today, so here's a little bit of a story on the other side, so people can get a full perspective of what's happening in the world. French luxury group Kering, who is the owner of Gucci, warned about a drop in sales of 20% in the first quarter for the brand. And we've highlighted some of the lower end consumer negative stuff that's been going on, and this is the higher end consumer. So maybe we're starting to see some developing warning signs for them too.
Yeah, and I have started, I had Costco in my portfolio. They had bad earnings and both like higher end stuff and I would say it's talk about weird like sector combinations. Like consumer defensive is both like higher end stuff and then also Elf Beauty is one that we've had in consumer defensive, but also like large package things like Costco that people like will switch to and they might change out of like higher price consumer discretionary stuff. But yeah, we saw Costco have weak earnings, this morning. We're definitely seeing consumer defensive weaken too, which is another sign. And I would say even Powell backing off of his normal I would say being less dovish, I would say is probably a sign that he expects some hurt coming in consumer discretionary too. Otherwise, he wouldn't really be backing off the rate increases. So I think we are going to definitely, imminently see more and more of a impact on uh on consumer discretionary, probably consumer defensive, maybe communications. We talk about that and like ad spending, but it's definitely on our radar.
It's going to be interesting to see how everything plays out. There's a lot of competing things going on, and I think you've said before maybe AI can kind of counteract some of the negative stuff that's happening that would normally hurt the stock market.
Yeah. I mean, there's two huge positive catalysts that it's just getting harder and harder to see a red year because of like the election and things, stocks doing well in the election, and this AI stuff is just like it is insane the way like they keep forecasting up these chip orders. Like absolutely insane, especially because like it doesn't happen people like in growing industries will update their guidance, but like I feel like there's constant updates with these chips. And what you'll see is like a company will report and then another one will up their guidance or like this, like they're all just kind of like realizing that it's just a boom market for that stuff. But I think I got to make the switch.
Yes, I'll see you on the other side, George, and I'll be here with the chat.
All right.
All right, chat. Hope you liked the topics that we have gone through so far today. If you did, hit that like button. I was so excited last week when I asked the chat if we could get to 20 likes for the first time ever, that we smashed it and we actually made a record of 26. So I'm not going to try and say let's get there today, but thank you for that on our last stream on Monday. So what we're going to do right now, when George joins back in, we're going to go into the model portfolio. As if you watch the stream, as you know, things are looking more bullish today. So it looks like we're going to be cutting some shorts from the portfolio, maybe adding a few longs. But George will take a look at individual stocks and how the portfolio is performing and make the moves live, so you get to see the update live. As always, if you have any comments, if you want to look at any individual stocks, feel free to comment them and we'll get to them. Let me update everyone on how QQQ and the SPY is looking in Prospero. So I believe the QQQ is at 41 when we started the stream. It's at 46 now, so I think it went up throughout the stream so far. And the SPY is at 53. I think the SPY was at 49, so I think they both went up throughout the stream, probably reacting to the market. If anybody was waiting for the Take-Two story, maybe we'll get to it on Monday. We have some bubble stories sometimes because we just have to time the stream accordingly. So that one is getting pushed again, but maybe on Monday we'll get back to it.
All right, here I go.
George, I just looked at QQQ and SPY, and I think they both went up throughout our stream. SPY is 53 and QQQ is 46.
Oh, yeah, there we go. Even more reason. Let's see. Oh yeah, model portfolio. We could get to 60% above the market soon. That would be pretty exciting. Oh, I can't believe I only 1x'd. All right, first. Oh, I didn't. I really want to arrange this behind me. It's suboptimal. What is that at about, Wolf? All right. So first things first, we are going to take a look at how many longs and shorts we have active. 68 longs and oh, look at that. Look at that sea of losses and 89 shorts. Okay. Yeah. We definitely need to get rid of these. Some shorts. All right. All right. So, well, first we'll just take a quick scan of the longs and see if there's anything problematic. APD, maybe. Oh, yeah. See? Stayed in this maybe a little too long. Yeah, okay. Exit APD. One long. It's a really lazy title on that last letter, Steven. So busy, I could not even think of a title. Okay.
Question from spikydude. What made us enter meta long again? Just good overall QQQ feelings?
Yeah, it's just like I had Google, like I just got more bullish basically, and in my more bullish, in my more bullish situation, I just was in more position. Like Meta didn't get hacked away because I didn't like it. Meta got hacked away because I just didn't like it as much as the other ones that I kept. So like it just became a very obvious thing to add when I started getting more bullish. There wasn't much thought, like, because I didn't like, and I think that that's the important difference. That it wasn't changed because I didn't like it, that it was changed just because I didn't like it as much as the other things, which is a different situation than not liking something. All right. Can you tell me if UDR is a loss or a win?
Currently a win.
All right, we're getting out. Well, I think we're going to have to get oh, come on. I need to get this latency when I stream and doing this. All right, so we need, oh yeah. All right, that was a bad idea. We'll add it to our list of stocks that have burned us. Oh, did we not get out of SPGI? I thought we did. Oh, George. Oh, Rackspace. Look at these. Oh, Jesus. I'm glad I didn't add Rackspace. I almost added it as a hedge the other day in my investing portfolio. Glad I didn't do that. All right. Can you talk to me about net option sentiment trend on Rackspace?
What's the ticker for that?
RXT. Are you not watching this, Steven?
I am not for letters. It doesn't look good. It's at
Doesn't look
29
good
now.
for us or for it?
The net options sentiment trend is down. It's at 29 now. It's at 21 this morning, but it's trending downward. Lower lows, lower highs.
Okay, we'll stay then. What about SABR?
SABR is at 33 after hitting a new low of 15 this morning. Its high along the trend is 42.
Is that a win? Are we winning or losing that SABR right now?
We are winning.
All right. Let's get out. Time to get out. No. Yeah, we're going to leave that in. Ooh, NI. Is it finally time to get out of NI? One of our longest standing holdings. Got to play our Sarah McLaughlin here. Maybe not. Yeah. Cue Sarah McLaughlin. Oh God, I knew we were. No. We're gonna hold MAXN as a hedge because we have so much tech. We'll get rid of one of our LPLs though. We don't need to like. Our LPLs wins. Steven?
Yes, one win, one loss.
Great. We're going to grab that win. Oh, yeah. Time to get out of Booyah. We got out of one of those hunt. How's FRHC doing in the net option sentiment trend?
It's at 0 right now. It was at 11 before. Looking very bad. Downtrending. So if it's at 0, does that mean it is the worst out of like all the stocks in the bell curve? Like, does it have to be like the lowest net
Wait,
option
what is
sentiment?
going on? I don't know if I want to exit my, no, I need to focus on this. Like I'm seeing this and it says like 1 day, like, but that's not right. Like this has been down. But we'll worry about that later. I think we saw enough that we want to exit. Taking one more look at Escalade. Nah, I'm holding. Sorry. What's going on with CRNC? Getting the hell out of there. Maybe I thought we closed one of those. Oh, I think we want to. What's going on with BW? Are we winning on those BW ones? Signed out. What the fuck? You're really gonna make me do this right now?
We are winning on the BW.
Both of them?
Yep.
Who asked you? Oh, God, I hate computers sometimes. Who asked you to ask me for my goddamn password? All right. Are we winning ABMs or ABM? Actually, ABR, look at.
Yeah, we are. Indeed.
All right. So I think
Wolf said it was just him fishing for your password, so don't worry about it.
is that what makes it happen? All right. That's a nice hack that we're doing there. We're not doing a sector update. We don't have time. Sorry, everyone. So we're going to do something that we don't normally do when we do this, but hey, you can't see my screen, but I'm actually just going to go in our picks on Prospero, see what it says. Take a look. Maybe Amazon. I think we might want to add Amazon. Taiwan semi curving back around. Just grabbing more straight from the Prospero signals. All right, let's do. Are we gonna get? Apple just loves to screw us over every time we get in, but you know we're gonna do it. We're just grabbing right off the Prospero short-term bull list. Oh, what is Constellation Energy? CEG. That is looking nice. Oh, God damn it. Oh. All right. Yep, we're just adding straight off the list. Oracle does not. I don't like Oracle enough. We're just gonna take a quick glance at long-term bull. How do we have any open Microsofts? Ooh, UNH. Let's get back into UNH. I'm just adding these right off the list.
Microsoft, we have one open.
Let's just take another one. At least a slightly better title than yesterday, Stephen. Not our best. Under the gun. Now that we use Thinkorswim, it gives us that little bell.
Yeah, I like that touch at the end of the day.
All right, that is done. Any questions here?
No real questions, just Wolf being a little
Just having
having
some
some
fun
fun.
around here.
Yeah.
All right. Any questions? Last call for questions. Jokes are fine too, but I'm not adding a lot of value there. You can just take that show on the road, Wolf.
That was pretty cool to see you do. Just take them right off the Prospero home screen because all of our viewers can do that for themselves. They can just look at the apps the stocks we're suggesting, and that was cool.
Yeah, I've been doing that. I have, like, I was talking to Steven. I actually, like, by the way, like, I've got 2 phones. I, like, kept my old phone to just, like, transfer data and stuff, but now I'm not giving it back. I love like, and actually it's like I've been doing it more, like adding with 2, like when I have 2 phones, I've just been like looking at charts on one and Prospero on the other, and like then I don't even like, because sometimes it's hard to like, I need a computer to make some of the moves. And when I'm on the computer, that's when I look at like the signals I have in Slack on like Excel and everything. But like, hey, if you could do things on a phone, it's great. And unfortunately, I think maybe it does require 2 phones. But no, not really. Like, I just like, for a lot of you, just like doing the exact same thing. I'm looking at the short-term bulls, long-term long-term bulls, short-term bulls. And really what I'm looking for in the long-term bulls, I'm looking for high net option sentiment because I already know the long-term signals are good. And for the short-term bulls, I'm looking for the opposite. I'm looking at like high profitability, high upside, low downside, because I already know it's got good other signals.
Yeah.
And that's why Oracle, like, to drive the lesson home, Oracle didn't make the cut because I saw that it had high options, high social, but only 53 upside breakout, which is not good enough for me.
Mm-hmm. And I guess we know why you're feeling good about Apple now. The 2 phones. Why they got added.
Yeah, I'm personally moving up Apple stock, 1 phone at a time. Yep. Maybe I'll have 3 next time you see me. Maybe 4. Like, my hands are just gonna be full of phones. Like,
yeah.
All right. I
don't see any comments. Thanks to everybody for coming. These streams are available on Spotify later if you can't catch them live. Have a great week.
Thanks, Steven.
Bye, George. See you, everybody. Thanks for coming.